quickly switch focus. Piramal Pharma is, doing very well in trade, 5% plus higher, of course, well off the highs. But we have JM Financial, which has initiated coverage on the stock. They've given it a buy rating. Varsha joins us to tell us what the key tailwinds and headwinds for the company are like. Varsha, also, the 5% move is post a very strong rally as well, right? So try and break this up for us. What's in stock?
Yes, Harsh. So in last week, all the CDMO companies were up because of the US biosecure, out of the key defense bill. But JM Financial still has a buy rating on Piramal Pharma, and that's the reason we are seeing the stock is buzzing today. Now let's analyze this. Let's deep dive what is working for Piramal and what will not work for the company. So the reason why JM Financial has given a buy rating is the CRDMO, that is CDMO market, is expected to double by FY28, and Piramal is actually in a unique position or in a good position as compared to the peers. But the bear case, maybe for a short term, of course, the US biosecure being out of the key defense bill will actually pose a short term risk for the company, if not long term, because all the CDMO companies were actually betting on this act. Now, moving forward, if you see this growth, actually, what if not US Biosecure Act, but Piramal will actually grow on the back of newly commercialized molecules and also their hospital generics and consumer business as well. But over here, if you see, the negative point for the company is because they are going into because the growth will come because of the hospital generics, the margins over there are lower as compared to the CDMO margins that you see in all the companies. So pricing stress in hospital generics may hit margin for the company. That's the negative point. Moving forward, if you see, what will actually work for the company, given the company has a target of FY30 revenue at $2 billion with 25% of margin. Now, this is on the back of CDMO business that the company is pegging in, but company has a higher sensitivity of CDMO business because majority of the business comes from CDMO, which is expected to grow at 17% CAGR. But do know that CDMO is a lumpy business. Okay, so for 2 years you may get a good business, but for next 2 years you may not get a good business. Take for example Newland Labs, which will not do good in FY25. So CDMO being a lumpy business and Piramal Pharma have a good contribution from this business, there is a higher sensitivity of CDMO business. But overall, if you see, Piramal Pharma has a good growth going ahead, but one needs to see that FY30 target, will that company be able to achieve it, considering a CDMO a lumpy business?
Wow, that's a really strong guidance. FY30 revenue target of $2 billion. Vineet, thank you so much, Varsha, for that.